If you want to have exposure to a real infrastructure boom in the developed markets, it's the US and pretty much only the US.
Welcome to the Jay Martin Show. My guest today is Sam Rines, the managing director at Corbu. And Sam is a regular guest commentator on platforms like the Wall Street Journal, CNBC, and many, many more. And today, Sam painted a pretty optimistic outlook for the United States, specifically the industrial sectors. Now, I'm aware nobody wants to hear optimistic takes. It's doom and gloom that sells in this business, but that doesn't make it right. And Sam paints a very thoughtful picture about why he is so bullish on the U.S. industrial sector and why he expects more tailwinds to come in the near future. In addition, how he anticipates the profits from these boring companies, as he calls them, being reinvested in the United States economy. So really thoughtful take. I appreciated Sam coming on the show today. We also touched on the geopolitical conflicts erupting around the world and how he sees them or not escalating. So interesting takes on that as well. As always, if you enjoy my content, I write a weekly essay every Sunday to over 40,000 investors just like me, trying to make sense of this crazy world. We look at current events through the lens of history and human nature. And studying history helps me understand the present a lot better. So check out my Sunday essay. Hit the link beneath this piece of content if you'd like to join 40,000 other investors every Sunday morning for a cup of coffee and a weekly essay from myself. Here is Sam Rines. Enjoy. All right, here I am with Sam. Sam, it's great to have you on the program. I'm looking forward to this.
Oh, thank you for having me, Jay. This is going to be fun.
So let's start here. Give me your high-level overview, global macro right now, Sam. What's catching your attention? What's keeping you up at night, if anything? And then I'm going to pull on some threads from there.
Perfect. Yeah. So one of the things I really think is being overlooked is just how popular the U.S. is from a global perspective. I really think that has just been overlooked dramatically. You saw a Japanese home builder actually come and buy a U.S. home builder at rates that, mortgage rates that we haven't seen in this century, right? So I think it's a really interesting dynamic there. And that was immediately after you had the Nippon bid for U.S. steel. And when you flip through the deck of the thinking behind that purchase by Nippon, or the proposed purchase by Nippon, one of the intriguing parts is, hey, listen, this is the best market in terms of both demographics and in terms of the outlook for economic growth in the developed world. If you want to have exposure to a real infrastructure boom in the developed markets, it's the US and pretty much only the US that you want exposure to. So I think that's one of the key places that's really being overlooked within the global macro picture is you have a relatively weak yen, an economy in Japan that's doing okay, but not awesome. And they're still coming and buying US companies, right? They're not using a strong yen. They're using a pretty weak yen to do these purchases. So I think that's a really interesting dynamic. The other dynamic I think that's really intriguing is the underreported fact that the US basically bailed most of Europe out in terms of energy, and we did it in about 18 months. Like, the fact that we could basically replace the need for Russian natural gas with US LNG that quickly is phenomenal. Like, that is, there's a lot of talk about the US industrial base can't do this, can't do that. It took 18 months for us to really ramp up how much we were sending to Europe and for Europe to be able to accept it, right? That's, it's a two-way street there. You have to be able to put it on ships and you have to be able to take it off ships. So I think there's a little bit of an undercurrent of the US doesn't have the industrial capacity, which it doesn't, and, is really going to struggle moving forward. It's really, in my mind, just a determination of what we're going to do and the economic incentives to do it. If you give a capitalist a good reason to build out capacity and infrastructure, they're going to do it, and they're going to do it rapidly. So I'm really intrigued by that dynamic. Also intrigued with just how much is going on in Mexico right now in terms of both the industrial buildup there, in terms of the economic activity there, and how much of it is Chinese companies beginning to understand that if they want to have access to the US, they need to be closer. right? COVID was the worst thing that ever happened to the Chinese economy for two reasons. One, US companies realized they couldn't have an overexposure to China in terms of their manufacturing and industrial base. And they realized that the costs were pretty much in line with what you can do with Mexico, right? Even if it's more expensive to pay people in Mexico, the transportation costs make up for it. And the lack of volatility and political, call it overhang, is much less in Mexico than it is in China. So those are two of the things that are really top of mind. One of the things that keeps me up at night is, I would say, the relative lack of cohesion to actually put the incentives in place to really have an industrial base boom within the United States outside of clean tech and some of those areas.
Okay, generally that's a pretty favorable scorecard for the United States. That's how I interpret this, which is music to my ears. Sam, it's nice to have a pragmatic, optimistic viewpoint. In macro, that's hard to find, as you know. So running through this, starting with point one, the U.S. is more popular than people seem to perceive it is. You're finding evidence of this in just foreign direct investment and transactions, right? For example, Japanese looking to scoop up American businesses, betting on the infrastructure boom, probably still to come, right? Which will be bolstered by reshoring, moving industry from China to Mexico, for example. This is probably very related, I would imagine, correct?
Oh, very much so. And it's interesting when you look at a lot of these boring industrial companies, whether it's rebar manufacturers, whether it's aggregate and paving, related companies, and some of these aren't small companies, right? Some of these are, very large multinational companies. They're talking about, 2, 3, 5-year type trends within U.S. infrastructure as you begin to have some of the stimulus and fiscal packages actually rolled out, right? Just because we passed a big infrastructure bill in the U.S. doesn't necessarily mean that those dollars are in the system yet. So you have companies like CRH out of Ireland that has a significant exposure to U.S. infrastructure, particularly concrete, asphalt, aggregates, etc. And they're more optimistic than you would believe. You have a small Dallas-based, I believe it's Dallas, might be Fort Worth, one of those two, based company that makes rebar, right? That is a really boring business, right? It's just not something that should be intriguing. They're talking about significant tailwinds, not necessarily in pricing, but in terms of volumes moving forward. They have just so to me, this infrastructure side of the world, in particularly the U.S., is very much kind of flying under the radar. And it's one of those things that can have a significant amount of traction, and it begins to spiral through the economy, whether it's construction jobs, which, again, interest rates are pretty much they're pretty close to the highs of the century. And guess what? You have construction employment in the U.S. at all-time highs. You have construction job openings pretty close to all-time highs and bouncing around all-time highs. These are things that, one, pay pretty well. They're very good for middle America, and they have a significant tailwind moving forward. So I think it's really underappreciated how much these spiral through the economy, whether it's Oshkosh with telehandlers and being able to build these things, these lifts that bring you 80 plus feet in the air, or Caterpillar, or some of these companies that really have a longer term positive tailwind. So I think that is also one of those things where we can talk about, fiscal deficits and what that means in the future, potentially means in the future. I mean, we've been doing that for the last 30 years. So we can talk about that, but the reality is that on the ground, there's a significant amount of activity that just doesn't get the attention it deserves.
And why is that? Is that because if you are the media and you've got to think about what you're going to cover today, you could cover something splashy like the AI boom and NVIDIA and maybe Bitcoin rally and these sort of, they're exciting, they're sensational for good reason, right? Or you could go the doom and gloom route and cover the deficits and the debts and the conflict within the White House, instead of maybe covering some of these boring industries that are receiving sufficient tailwinds? Like, why are they underappreciated, Sam? What's your take on that?
They don't make for good headlines. I think you
They don't
nailed
make
it.
good
Right.
headlines.
It's really boring, right? Who wants to go on CNBC and say, rebar is doing really well right now, or concrete prices are up 20-ish% year over year. Why is that? Because of demand, not because of some sort of difficulty in getting it from point A to point B, right? Concrete plants are very close to where you actually use it. So to me, it's just boring, right? If concrete had, I'd call it if concrete had a Bitcoin story to it, it would probably get covered, but it doesn't really.
Right. Now, when you look at so building that semi-bullish case for the United States on the back of some boring industries and reshoring of industries, and how would you relate that to the health of the equity market right now? Maybe look at like the S&P 500, continually more consolidated into fewer and fewer names carrying this market. What's your take on the health of the equity market at present, Sam?
So if you look at the equal weighted S&P, it's actually done very well off the October lows, right? So I had a conversation with a few people. It was the beginning of this year, where I basically said this is a pretty dumb moniker of, and I didn't basically say, I said it's a pretty dumb moniker of the Mag 7, because if you invested in a bucket of home builders in 2023, guess what? You performed pretty much in line with the Mag 7. It's pretty stunning, but one of the best ways to perform in a very boring way was to have home builders in your portfolio, right? That was one of the best ways to get some alpha outside of the Mag 7. It's really, I would say, it's much more fun to talk about NVIDIA and Tesla and Meta and Alphabet than it is to, say, hey, DR Horton is absolutely crushing it. Here's why, right? That's a pretty boring thing to talk about. Or, hey, these things are still trading at 10 times earnings, and if you get a re-rating to just a normal S&P type 15, these things have a long way to run. Or if interest rates stay high, these guys are going to do really well. And if the FOMC begins to cut, these guys, the home builders probably aren't going to do as well, because there'll be more housing inventory from the existing side coming online. So it's just not as much fun to talk about, right? But I don't see the Mag 7 as anything other than basically an opportunity to go look at everything else and see what else is performing and really understand the fundamental drivers of some of these areas that aren't necessarily getting the coverage they normally would.
Interesting. So can you get a bit more granular on some of these opportunities, Sam? Like, where specifically are you shopping today for opportunity?
Sure. So I'll kind of walk you through one of the themes and how it evolved over the past couple of years.
Okay.
So call it early 2022, we began to see this price over volume mentality from a number of, call it, multinational businesses, U.S., European. It didn't really matter who, where you were located. You were really beginning to push price because your volumes just weren't coming in. So you kind of fast forward into mid to late 2023. And you began to see these companies, whether it was Procter & Gamble, Kimberly-Clark, Unilever, they really began to run into the peak of their pricing power, right? The consumer was really beginning to push back in a meaningful way, and they figured out they needed to stop. And I'm not just saying that, you can listen to any number of conference calls, and they're all kind of coming through with that. And what they began to do was say, we really need to begin to build our branding back. And so, we need to have more volumes. We need to have the consumer really more engaged with us. And what that basically said was, we're going to use some of this newfound margin that we had. And we're going to begin to build that into brand building, which is advertising spend. And so, all of a sudden it was, who's going to be the big beneficiary of this with the boom in AI, the problems at Alphabet, et cetera, et cetera. It's really, there's call it two places to go and an emerging third. You can go to Meta with their incredible reach. You can go to Amazon, since if you want to have people buy your product, that's the best place to, have the product in front of a lot of US eyeballs. Or you can go to the emerging third one, which is Walmart, right? Walmart actually has a pretty good sized advertising business and it's growing rapidly. So, and we call that the battle for volume, right? If you're going to brand build, if you're going to do all these things, you have to spend on advertising dollars. And that really begins to build into this really interesting thing where, it wasn't a one-off that Meta had a good quarter. They're going to have several of these good quarters in a row. You have the Olympics coming up. That's a big advertising boon for them. But you also have these brands really pouring these margin dollars back in, and that's going to be good for them. In turn, what that does is it allows for Facebook, Alphabet to a lesser degree, Amazon to a pretty significant degree, to invest in AI with some of their increased dollars that they're getting from these brands that need to build. So you get this positive cycle, call it back into the technology development. So that's one way that I really think you can take what appears to be a rather sanguine or dull thing, which is a bunch of, Pampers talking about how much it needs to advertise, and really building it into something that allows you to see where these dollars for NVIDIA or AMD are going to come from and how much is going to go. And it's pretty incredible when you look at Meta, when you look at Amazon, when you look at Alphabet. Almost all of these companies increased their CapEx from a year ago. So if you look at what was going on in the fourth quarter, which is what NVIDIA reported, you can kind of extrapolate that forward to NVIDIA and AMD are going to have better 2024 than they had in 2023. So it's a continuation, It's a flywheel that begins to build back on. And then you get better advertising tools from Meta, Amazon, et cetera, that allows them to charge more, which again, flywheels.
So just to make sure I'm following the puck here, going back to 2022, and you were talking about the price over volume thesis for a while. I recall hearing some interviews back in the day, you discussing this theme, but essentially it's brands acknowledging they're not going to push volume that year. It just wasn't going to happen. What they could do, therefore, was bump price up. And so you saw companies like Procter & Gamble and Unilever, which collectively control thousands of different brands, just for context, all begin to push price up and test the upper limit of what people were willing to pay for whatever it was that they were selling and that people needed. And eventually they hit that limit, right? Maybe in 2023, they reached the upper limit of their pricing power. And in exchange of that, hit record margins, right? So excess cash flows into the company. They've now hit pricing limitations. They want to reinvest this cash, and they've decided it's time to go hard into branding, right? Let's
exactly. And if you look at Unilever, had this great chart, and it was year over year in their, call it, I'm not sure if it's their fiscal, but the calendar fourth quarter. They had 200 basis point, 2% gain in their gross margin. Then they spent 1.3 of that. So basically, call it 65, 70% of that margin gain into advertising and marketing. Like they just had this bridge that they built and just showed everybody, hey, listen, yeah, we had this bump in gross margin, but we spent a lot of that back into the brand building. And look, we got a little bit of volume for it. Sure. It was absolutely incredible. And that's really the trend, I think, for 2024 is more and more companies you're going to see doing that.
And that sets up a bullish case for the Magnificent Seven, correct? This is kind of...
It does, is assuming that Alphabet gets its act together in call it due course. But it sets up a really intriguing 2024 for Amazon, for Meta in particular, and probably for some of the companies that people really aren't paying attention to. Like I'd love to use the example of AI is really, really good if you have the data, right? If you have an LL, if you have the large language model that actually helps you deliver something that is interesting to the end user, right? If you don't have a useful LLM, then AI is kind of pointless. there are a lot of companies out there in, call it the non-AI sector, that have amazing data sets that are going to be able to use them in ways I don't really think are fully appreciated. And I love to use the example of in the US, we have Kroger, and it's a very large chain of grocery stores. And they have been collecting user data for years, right? You go in, you swipe your Kroger card, they know what you bought, they can track, they can track it to your phone number, et cetera. That is going to be an incredibly powerful LLM when they begin to figure out how to use it, right? When they begin to have a way to properly target the end consumer that they have so much data on, that's going to be powerful. And you can extrapolate that across all the different companies that have significant data sets. Those data sets are going to be far more powerful than I think people anticipate.
And what's the end goal for those data sets? I mean, this kind of sounds like maybe all roads lead to more targeted advertising at the end of the day. Is that the game?
It's the game, and it's also I love to cook. It's one of the ways that I get my head out of the investment world on the weekends, and I like to I like to fire up my smoker and have some ribs, whatever. It's targeting me on Friday with a, hey, we have ribs for 50% off. Here, come get them, because Kroger has a glut of them. They know I like to buy this. And so on Friday, I'm like, I'll do ribs this weekend, or a pork butt, whatever they might have. Right? It's matching what they need to get rid of, what they have a glut of, or whatever, with targeting me as the end consumer that they know may not come in if they don't target me for whatever reason. So I think it's a really intriguing direct targeting that may eventually not be, I would say, as good for Meta as people anticipate, because these data sets don't live within Meta, they live within Kroger.
Right. And so therefore is, Meta, maybe Alphabet, looking to white label some kind of a system that they can layer on top of Kroger's LLM, or do you have a perspective on how those two companies will facilitate that transaction?
I have no idea.
Yeah.
I mean, I would never bet against Meta and Alphabet figuring out how to monetize across their vast user base, right? So I have no idea how they'll do it, but they'll figure out how to. It's just a matter of when and how.
Yeah. Okay. The second data point, or the second item that was on your list when I asked you to score the world from a global macro standpoint was how quickly the United States solved Europe's energy crisis last winter. Course of over 18 months, effectively they replaced Russian natural gas with American natural gas. What's your take on the energy space right now? I know you've been long-term bullish for a while. Are you still? What are you focused on there, Sam?
I am not bullish at all,
okay.
which is interesting. This is one of the. I was hoping you'd ask me this question. And it's kind of. I'll do it in a couple of parts, maybe a few. The first one is we have a war in the Middle East that is really close to a significant number of producers. Right? You have people in basically just to the south of Saudi Arabia shooting missiles at U.S. ships. Right? You have Israel fighting a war, you have proxies with Iran, et cetera, and you have oil basically capped at $80. I mean, that's pretty stunning in and of itself. And you have OPEC sitting with, call it, greater than 5 million barrels of spare capacity at the moment. Right? They have cut, and they still can't get it to stick at 80. Part of that is the U.S. boom. Right, you just for some reason cannot stop Midland from drilling more and more wells. The second is in kind of the other intriguing part is you also have Venezuela's saber rattling over Guyana, and one of the most prolific non-shale patch energy spots in the world at the moment. Exxon is very, very bullish on what they're capable of getting out of that play. Sitting off of Guyana, you have the Hess Chevron deal. You have Sinnock sitting there the Chinese national oil company, in partnership with Exxon on it. And you still have Venezuela threatening to invade its neighbor, right? So all of that put together, and oil can't bust $80. And it's really difficult to see how you escalate further from here, barring a Venezuela invasion of Guyana and then shooting at a bunch of ExxonMobil ships, right? That's pretty much where you get the escalation from here, or Iran doing something. In both Venezuela and Guyana, right? That's about 1.5 million barrels a day, give or take, at the moment. That's not that much. Iran, I mean, they're not shipping to the rest of the world anyway. They're really just shipping to China. So you kind of put those pieces together, and it's kind of like, what is the catalyst for oil to actually move higher from here? It's difficult to come up with one, right? Basically, I'm looking at the OPEC plus cuts as basically a threat to the top side, right? If you begin to have oil bust over $80, you're probably going to have a temptation to continue to pump, particularly if you haven't had the ability to for the last year and a half, right? OPEC has been limiting for, I think it's 18 months now. The only one that isn't really paying attention within OPEC Plus to its output is Iraq, right? Everyone else has really held back their capacity in line with, or their output and exports in line with what OPEC asked for. So if you begin to have oil prices rise, there's a legitimate threat that OPEC's going to begin to put more oil on the market, which in turn pushes down the price of oil. I think it's a pretty bleak picture for oil bulls, at least in the near term. I think you could have some bullishness, but it's probably not in 2024.
Okay. And so just to recap, this is largely because, you look at the conflict between Venezuela and Guyana. Even if Venezuela were to invade, the amount of oil coming out is like 1.5 million barrels per day, not significant enough to really, but more importantly, I think what I heard, Sam, is like, you're looking at the tension in the Middle East, you're looking at the tensions in South America. These tensions are probably already priced in, right? And so if you're looking at the war in the Middle East saying this may surge oil prices, your answer back would be like, if they haven't now, what are you waiting for, right? And if they do, OPEC's got the ability to sort of paper over those price increases by just producing or releasing a bit more, correct?
Yeah, exactly. And I would suggest that you're probably looking at between a $10 to $20, depending on which type of oil you're looking at. A $10 to $20 geopolitical premium is probably in the market right now. And if you begin to see that wane, that's call it mid 60s to mid 50s oil.
Right. Okay. All right. What is your take on the various geopolitical conflicts? I wanted to get an update from you on what your take was on Venezuela, Guyana, but maybe you covered that a little bit. Anything else you want to bolt onto that people should be aware of?
Yeah, I would say one of the things to really pay attention to with the Venezuelan rhetoric is how much they dislike Exxon and how much they never mention Chevron in a negative way. That is a really important thing to keep in the back of our minds when we think about what Venezuela is really looking for here. It's not so much, in my opinion, that they're looking for actually invading another country. I just don't think that's really what they want. What they really want is Chevron to pay attention to their fields, right? To continue to put some capital into there's a very large offshore natural gas deposit that Chevron has access to, and I believe still has a partnership with one of the Venezuelan state-owned enterprises with. They have significant onshore heavy oil production capabilities. And I think that's really what Venezuela wants, is basically a negotiated settlement of, yes, we'll do a little bit, we'll do more capital and pump more oil in your country, aka Venezuela, but please don't touch our Guyana assets, right? Those are I think it's very much, I call it a bargain for CapEx. That's really what I think you're looking at from the Maduro regime at the moment. They got Chevron basically got the green light to go back into Venezuela, and there was a deal about an election, and now there's a question about whether that election is really an election. I think the U.S. is probably going to say, "Yeah, it looks like an election. Oh, look, Maduro won. Cool." And then it's just going to be kind of a move on and extend. Chevron asked for in a 15-year extension with one or two of their partners in Venezuela. So to extend that partnership. So I would say that that's a pretty good sign that you're beginning to see some thawing of relations, at least when it comes to Chevron and Maduro, not necessarily the U.S. and Maduro, but definitely Chevron and Maduro, and a little bit of maybe some bargaining power with Exxon. Hey, if you don't let us in here, then Venezuela views you as the evil empire. Maybe you should let us in here so that they like you a little bit more. I think it's a really interesting dynamic when you really dig into just how much Exxon is hated in that part of the world.
Yeah, very interesting. Okay. So, last time we spoke, Sam, it was November, and you were one of our guest speakers at an event called Crisis and Conflict, the Changing World Order, where we were trying to dig into the question of whether or not we were heading towards or already in World War III. What's your take on that question today when you look at the Middle East, South American potential conflict, obviously the European conflicts and tensions maybe building in the South Pacific? What's your take on that question today? Are we heading towards, are we in World War III?
Ooh, no. I don't think you can have a world war when you don't have a hot conflict between the U.S. and China, right? It's a series of what I would call unfortunate circumstances. There's a question of whether it's the quote unquote axis of evil, and they're all coordinating to reduce our stocks of weapons, et cetera, et cetera. I would say Putin basically invaded Ukraine in 2014, and we didn't do anything, right? So that's been an ongoing conflict for the better part of a decade. That's it's not something that just flared its head. It's just once they actually put a whole bunch of troops in there, we began to pay attention because that was kind of our thing. On the Israel front, Israel fights a war every 20 years, give or take. Right? This just happens to be a long one. It's never exactly something that I would describe as positive, but if you look at the number of wars Israel has fought, it makes the U.S. look like a pacifist, which is hard. You look at the border tensions with India and China. Those have been a forever thing. There's some suggestion that China would only build up its nuclear forces if it suspected it was going to war with the U.S. India's a nuclear power. I would suggest that having a very, very large country that has a border dispute with you that has nuclear weapons is probably a significant catalyst for having them as well, particularly when their economy and their population is booming and you're on the other side of your economic boom and population boom. So I would say, we're seeing a lot of conflicts around the world. If you look at the count of conflicts globally, it's actually down from where you would have thought where we had it in the 80s. I would say that there's an increasing competition on a proxy level between great powers, but great powers always do that, right? That's not something that's new, right? Vietnam Vietnam's a great example of that. We weren't in World War III then, and that was a much more violent time, particularly for the U.S. And the rest of the world. No, I would say maybe we're in Cold War II. And, if there's anything that's great for technological development, it's a Cold War.
Interesting. Expand on that last point for me, if you don't mind.
We only went to the moon because of the Cold War, right?
Yeah.
There was no real point in going to the moon except to show the USSR that we could go to the moon, right? We went to space. That was pretty cool. And then we were like, let's land on the moon. that led to the development of semiconductors, that led to the development of the ability to have mobile phones, et cetera, right? The technology that came out of the space race basically changed the world we live in now. I would suggest that the saying, and I forget which Soviet leader said it, we have deprived you of an enemy, and that's the worst thing we could do to you. I would say that the best thing that the U.S. is getting out of this is a reason to compete. Right? We didn't really have anybody to compete with over the last 20 years, give or take. Right? We were technologically superior in every way, and I would say we got a little bit lazy, and now it's go time. And if there's anything that gets a capitalist going, it's the ability to make money, find new ways of using things, and invent new technologies.
That's a really great point. I love that, actually. And I think you're very right that, when you're the, undisputed hegemon in the world, you've got very little reason to invest aggressively in growth and innovation. When your status is under threat, you've got all the reason in the world, right? Which is what we saw during the Cold War. I mean, could you expand that point to say, yes, a lot of innovation came out of the Cold War, but a lot of innovation comes out of war in general. I mean, most of our most useful innovations have come out of some sort of conflict, right? Is that correct?
Ooh, yeah, I would say that is correct. I mean, there's a reason that DARPA is DARPA, right? There's a reason that all sorts of incredible technologies come out of, the skunk works, right? There's some incredible stuff that, we don't know about that's probably being invented right now to combat whatever risk the U.S. Defense Department sees coming around the corner. And
Can I take a left turn here for a minute, Sam? So
sure, yeah.
How much of the cultural conflicts in the West, call it United States, Canada, Europe's playing the same game, do you think is in response to us not having a focused adversary on a global level? Like, we've had it pretty good for a real long time. And when you lack maybe the focus that an adversary presents you with, you'll find other things to fight over or dispute, and weird conflicts emerge. What's your take on that?
I would say that's a really good take. It's a really important thing. There's nothing that brings together America like having something that is the them, right? There's the us versus them, right? That brings together Americans. When we didn't really have anything outside as the us versus them, call it, the USSR was the easiest them, right? There were very few Americans that would have said, yeah, I love the USSR. There were some, but not many. When you deprived the us versus them, it became us versus them, but let's do it internal. And that really, I would say, was fractious over time.
Yeah, it's amazing what that provides. I mean, what's the old saying? Nothing unites England like war. Nothing divides them like the Beatles.
Yes. Nothing divides them like Brexit.
Exactly. Yeah, no, it's a point I've been debating, just watching the rise of populism and the lack of any sort of civil discourse that we can have anymore, how every little conflict becomes a big conflict. And you see this at the late innings of any empire. Ray Dalio has done a lot of great work on this, studying the cycles of empire over the last 500-600 years, comparing the Portuguese to the Spanish, to the Dutch, to the British, to the Americans, and saying, what are the telltale actions and behaviors that we see during the sunset years? Yes, we see, insolvency of the state for sure, just reckless fiscal policy, all this. You see rising internal conflict in response typically to fiscal policy leading to increased wealth gaps. But people stop agreeing on everything, right? And you start to see behavior that kind of borders on a civil war. And if we can't get our act together, that's when we're most vulnerable, right? Which typically happens after a couple generations of prosperity, right? You find...
Yeah, a couple generations of prosperity, and to that point, and a significant amount of, I would say dysfunction, right? And dysfunction within institutions in particular. You can have prosperity for a very long time if you don't have dysfunctions within institutions that really matter.
Yeah.
Once you begin to have prosperity with institutional decline, that's really where it begins to become significantly more problematic than simply being wealthy.
Right. And I think you can have that dysfunctional institution, you can have the rising internal conflict, and even that can maintain for a long period of time until you have the external competitor, right? The other party, the other country who can stand up and challenge your superpower and then force you either to get your act together or become unseated, which typically eventually happens at the end of it. Every empire eventually does pass the puck.
Yeah, but the only thing that I would counter with is you did see a significant, call it internal fracturing within the U.S. during the 60s and early 70s. You saw a significant one, and you had a significant external competitor, right? And I think the significant external competitor of the USSR, really, that was their shot. That was their one shot. And, the US still managed to come together to enough of a degree with which to not only counter, but, significantly outperform and move forward. And so I would say it's all about getting it over it, so to speak. The US has tended to have considerable internal frictions and somehow manage to move on and figure out something else to talk about.
That's good context as well. I've had the former Prime Minister of Canada on my podcast a couple times, and he's been very focused on the rising trend of populism in Canada and abroad. But I asked him sort of that question. I said, look, I find I'm struggling to see how we correct course here because we are seemingly unable to agree on anything at a cultural level. Every small conflict becomes big conflicts. Partisan lines are becoming deeper, and more divided. We're seeing the rise of sort of extremist groups on the left and the right now, right? Whether it's, Antifa and QAnon and weird factions like this and all this. And how do we turn this ship around? And he said effectively what you said. He said, look, Jay, when I grew up, political leaders were being assassinated. So if you think it can get, if you think this is as bad as it gets, like, no, we've come back from worse. We've come back from worse already in recent history. People forget that, So USSR fired their shot. What's your take on China's ability to fire that shot today, Sam? Are they running out of time to make their power play, or where do they stand?
Ooh. I think you had Elbridge Colby on your show not too long ago, and I would agree with much of what he said there, which is I don't think they're ready yet. Right. I would say, there's a reason why Xi Jinping said 2027. Right. That's enough time for them to play a little bit of catch up with the U.S. But at the same time, the problem with Taiwan is that Taiwan has a significant amount of, call it, one generational U.S. stuff sitting there. So, they would basically, if you invade Taiwan, would have to, if you're going kinetic with Taiwan, you're going kinetic with not necessarily outdated, but a little bit older U.S. equipment, right? Not this generation of stuff that you would get if you went directly to war with the U.S., but you're getting some U.S. heat. That's going to take them a little bit of time. I don't know that 2027's, I don't think it's going to take them until 2027 to be ready, but they still got a little bit of time. And I'm not sure that they really want to do it ahead of the U.S. election. Right. I don't know that they want to do that because there's a little bit of what you have with Biden, you don't know what you have with Trump. Right.
Sure.
And if you don't have a reaction from the Biden administration and the invasion of Taiwan, that is going to cause a significant number of expats from Southeast Asia to probably vote in favor of Donald Trump. Right, because it's going to be the easiest way to say, hey, maybe Donald would have done something about this.
Right.
Maybe they wouldn't have done it if Donald Trump was in here, et cetera, et cetera. He's promised significant tariffs on China. Boom, here we go. So I would say they probably don't want to do it before the election, because that would guarantee a very volatile relationship with the U.S. Very volatile.
Yeah.
I would also suggest that their financial system is not fully capable of handling what the U.S. would rain down in terms of sanctions. That is incredibly important. They're getting there. They have some capabilities. They do not have all the capabilities that they would probably like. They're still a significant holder of U.S. treasuries. If you look at what OFAC did to Russia in a very, very short time frame, that's basically what we've seen as the playbook for what the U.S. would do to China, probably on a slightly smaller scale, but it would be incredible how much firepower OFAC would rain down quickly.
Do you think those sanctions have had the long-term effects on Russia that they were intended, or do you think Russia's solved those problems to a large degree?
I don't know that Russia solved the problems. I don't know that Russia was ever part of the global system really to begin with, right? Outside of exporting some energy and food to Europe. I mean, what exactly were we buying that was Russian? It's, if you can list off, 7 or 8 different things, I mean, it's pretty difficult outside of, some food, some critical minerals, and some uranium from their nuclear arsenal that they were taking apart to power nuclear reactors. I mean, it's just not that much. So I would say they were never really part of the broader global, I mean, they were to a degree, but they were never really integrated significantly into the global system, right? They imported more of, call it US and Western goods than the West relied on them outside of energy. So I wouldn't say that they've necessarily had as much impact as anticipated, but they certainly have done what they were intended to do.
Okay. All right. Look, Sam, I want to thank you for coming on today and chatting with me. And anybody who wants to hear more from you, where should we point them today?
Twitter, @Samuel Rines.
Okay, we'll put that in the show notes @Samuel Rines. Look, Sam, it's been a pleasure. Love to do it again sometime. Once again, thanks for coming on.
Hey, thank you for having me.
Commodity investing for beginners. No complex strategies, just actionable information. Our comprehensive course breaks down the complexities so you can make informed decisions and gain financial freedom.